And we are back. John Adams here on the Real Estate Coffee Break. Glad to have you with us this Saturday morning or wherever you happen to be, whenever you happen to be watching this. We are now live streaming on, what are we on? Spotify and Apple Podcasts and soon to be Google Podcasts. So we're going to be all over the world. Our very special guest this morning is my friend, legendary real estate investor, author, and most importantly, trainer, John Schaub. How are you, John?
Good morning, John. I am doing just wonderfully down here in sunny Sarasota, Florida. It's a beautiful day.
Well, yeah, I love Sarasota. The only problem I have is that every now and then God gets angry at you people and sends a hurricane that just sort of flattens the whole thing. We don't get that much up in Georgia. So
well, that was 1961, the last time we had one that came close, and before that was 25. So it only happens about once in a lifetime.
All right, well, good. I think I'll avoid that once in a lifetime then. John, you have a great newsletter that I am a subscriber to, and for January, you made some predictions. In fact, I love the headline, and it's on our screen right now. It says, "Good riddance 2020, welcome 2021." I said earlier on New Year's Day, I said 2020 is not a year upon which I shall look back with unbridled enthusiasm. What you've got some points here that I want to just cover and just get you to give us a few words of wisdom on each of these topic areas as sort of a prelude to a more in-depth discussion as time goes by. Okay. John, you said there are 8 areas that we need to be watching right now as we go into 2021, and this is really relevant information. What do you think is going to happen with interest rates?
Well, John, this may not sound right to you, but I don't care. I've been buying houses since the 70s, and I bought houses in 1981. I bought 16 houses, and all the interest rates were 14%. Interest rates have effects on the market, but the thing that affects it more is the ability to borrow money. You know, if people can borrow, they'll go out and pay 14%. People buy cars right now, and some of them are paying 14%. They go down to payday loan people and pay more than that. So the interest rate itself is not key, but there's different opportunities at different points in the interest rate market. I'm both a lender and an investor. I don't make loans when interest rates are 0.6% or 3% or 5% because it's not the risk is not covered. You know, you need a better return than that to cover your risk. And if you're in a real estate business, which I'm in, you have to do some due diligence before you make a loan. I mean, you just don't loan somebody money because they want it. You have to check out the property and make sure you're going to get your money back and make sure they can afford to pay for it. So there's some time involved too. So this is not a time to be a lender. It's a time to be a borrower, obviously. And I've encouraged people of all ages to go out and borrow all the money they can at these rates, long-term rates. My daughter's here from Australia, and the best thing you can do in Australia is get a 1-year loan. They adjust interest rates every year. So wow. To get a 30-year fixed rate loan at these rates is an opportunity of a lifetime, I think. So
I said
to borrow.
I agree 100%. I said if I could get a 100-year fixed rate loan right now, I'd take one. I don't care about paying it back. I just want to lock in.
You're not going to pay it back, so
you're exactly right.
And the point that I always kid about in class is I said, how long does it take to pay off a 30-year loan? And people were puzzled. They say 30 years. I said, no, it takes 15 minutes. You know, you call them up, you ask them how much you owe them, you pay them off. You just have the right to pay them that low interest rate for 30 years. You don't have to pay them.
Right.
But I don't think we're ever going to see rates lower than they are today. So today's the day. Borrow.
So when is the best time to buy?
The best time to buy is when you find a deal that you want to buy that's going to provide the benefits that you're looking for. You know, if you're starting out, you're probably trying to get your first $1 million. So you want to buy something that's going to make you a chunk of that $1 million, which doesn't mean you're not going to buy it and sell it and make $5,000. That'll never get you to $1 million. You want to buy something that you're willing to hold for a long time, that'll double in value and then double again and then double again. So it has to be something that you're willing to own for a while. And the best time to buy is when you find that particular property. But you want to, the key is focus here is knowing what you want to buy. And once you know what you want to buy, particular, what neighborhood, what type of property, what price range, how much down, what kind of financing, then you're that focused. When you see it, you'll know it, and you make the offer and you buy it.
One of the problems I see is I always say the deal of a lifetime comes along about once a month if you're ready. People just let deals go because, well, they weren't planning on this opportunity coming up, and they don't know what to do, and then pow, it's gone. So I think the best time to buy is right now. I think you're right. Why would anyone put money in a savings account right now?
Well, I have a bunch of money in a savings account, and for two reasons. Number one, it helps you sleep better. Number two, I'm ready for opportunity. You want to be ready for opportunity. And we're talking about the best time to buy. If you're just looking from a price standpoint, the best time to buy is in a recession, of course, when banks are not lending. And if you're new at this, what you're going to see if you just watch banks' lending policies, there are times when banks are trying to get rid of money as fast as they can. They'll loan to anybody, and we're getting close to that time again. And then there's times that they won't make anybody a loan. They won't loan to any investors. They give anybody a hard time. And when the banks won't make anybody a loan, prices become very soft because if somebody has to sell, they have to sell to somebody that'll pay all cash because nobody can get a loan. Well, that's the best time to buy, but you can't buy at that time unless you have cash or know somebody that has cash. But the prices literally go drop in half. I mean, the price you have to pay for something will go down that far if you have cash and you can make a deal in a hurry.
All right.
Well, that's why you have cash in the bank.
All right. Now, we are seeing just in the last, I think, 12, 18 months, a real sea change in the way technology has allowed workers to be more mobile. How does that affect real estate investing, and what trends should we be watching, John?
Well, people are moving to places where they really want to live, not where they have to work. So, instead of taking a job someplace, and we won't slander any state here, but someplace where the weather is bad and the traffic's bad and it's just not a fun place to live, they can come live someplace fun now. And they can commute, like we're commuting right now. They can commute on their computer, and it's so much cheaper. And what people are finding, both companies and people are finding, that they're willing to pay more for a house in a nice area just because they don't have all this transportation expense. They're not commuting to work. They don't have to get dressed up to go to work. Look at you and me. We've got our best clothes on right now. But it just makes life more fun. And I think you're right. I think it's a sea change. I don't think we're going back. I think when the genie's out of the bottle. Big companies don't want folks to come to work in big office buildings that cost them a lot of money. They'd much rather have them work at home because they find now they're very productive at home. So I think it's a new day, So from a real estate standpoint, nicer houses, bigger houses, people are willing to pay a little bit more for both rent and to buy. So it's been really good for the housing business.
I remember distinctly the first time I saw, and you see it on the screen, WFH, and I said, what does that stand for? And of course, it's work from home. And man, has that been a huge driver in giving people the freedom to live wherever they want to. It just doesn't matter as much as it used to, for sure. You said that Uncle's, and you didn't say it this way, but the gist is Uncle Sam has a printing press. What's he doing with it?
Well, it is, in the old days, they actually would print money, but the reason Uncle Sam's influence on the housing market is important is they buy mortgages. So they provide the banks with a place to sell their mortgages. So bankers that are lending money to people buying houses today don't keep those loans; they sell them. And if the government will buy them at very low interest rates, which they're doing today, that's what keeps this market moving. So they're going to keep doing that. And plus, the other side of it, of course, is they're going to spend a lot of money, I think, on the virus. They're going to spend a lot of money helping people keep jobs and stay in their houses. So all that's inflationary. And I don't see that going away. I think for the next 4 years, we're going to have a kind of a roaring economy based on the government spending.
Our mutual friend Hans Trupp on St. Simon's Island always says in the real estate world right now, there's a lot of money sloshing around.
Mm-hmm.
So he's exactly right. And so that leads us to number 6, which you sort of already commented on, but who benefits during inflationary periods?
Well, the people that benefit are borrowers. When you borrow money today and you can pay it back 5 or 10 years from now with a dollar that's really gone down in value by half, you're repaying your debt with 50 cents on the dollar. And that's why it's so important to understand leverage. The flip side of the coin, of course, is the thing that drives people out of this business, and the reason people go broke is they borrow money that they can't pay back. So you need to understand leverage. You need to understand the business of real estate and know how much you can borrow and how much you can pay back, and how to best structure that debt and who to borrow from. So there's a lot of moving parts here. But inflation is going to be with us. Inflation's been with us forever. It's the way the government works. I mean, they want to give people more than they collect, and they're going to keep doing that forever. So, if you're a young guy like us, and you're going to be around another 30 years, you wouldn't want to just put your money in the bank and say, I can take out $50,000 a year for the next 30 years. The 50 grand probably won't buy a pair of shoes in 30 years.
I think you're right.
You have to stay tuned in to what's going on. The dollar will continue to go down in value. You can just count on that.
Well, that's sobering. You say that people are looking for and want investments that can be safe and that can be understood. Would you explain to me how Bitcoin works?
Sure. You have to call me on a private line, though.
Well, then how about Robinhood.com and GameStop?
Well, let's just talk real estate for a little bit. People that get into real estate and don't understand it, and they do it every day. They go out and buy a 10-unit apartment building and they've never been a landlord, or they go out and borrow $1 million and they've never borrowed money for their life. These things are not smart. And the reason I have been talking to people about buying houses for a long time now, building wealth one house at a time, is because it is safe and it is understandable. You can understand what a house is worth and what it will rent for. You can develop a relationship with that tenant. It's not like it's bulletproof or perfect, but it's a lot safer and a lot easier to understand than some limited partnership offering or something that apparently interests you, like Bitcoins.
Well, I'm proud to say that I don't understand it and therefore kept away from it. That may prove to be a mistake at some point in the future. But our former senator and real estate broker, Johnny Isaacson, here in Georgia, said to me one time, he said, John, last time I checked, there are about 330 million people living in this country, and most of them prefer to live indoors. And I always thought that people got to have a place to live. And
the other side of this is you and I have both been married a long time, and we've got this rule in my house is before I buy something, I have to explain to my wife how it's going to make us a profit. And so if you can't understand it and explain it to somebody, don't buy it.
Well, I sleep with my accountant, John. My wife is a CPA, and she has finally dropped the boom and told me no more houses. Now, that doesn't mean I'm not looking, but she says this is enough. There's no reason to have any more. So we'll see.
When's the last time she told you that?
About 3 months ago, I think.
Okay.
I accidentally bought a house, and there was nothing I could do. It was just such a good deal, I couldn't walk away from it.
I understand.
And one of the things that I have learned from you, John Schaub, is that you always talk about long-term tenants being valuable assets, being the key. What are your thoughts on long-term assets? Because a lot of people just turn over every year, and there are expenses associated with that.
Well, I've owned a lot of different kinds of properties. I've owned things as wild as a motel. I've owned apartment buildings and duplexes. And I finally figured out that houses were just easier to manage because people tend to stay longer. It's just
But what about the car wash?
Well, there's a whole list of things that I'm not going to talk about, but that could be a different day.
Okay.
But if you just think about it, if somebody stays in your house for 4 or 5 years, it just keeps your expenses lower. You don't have to paint it for 4 or 5 years. You haven't had a vacant day for 4 or 5 years. So my goal has always been keep my tenants as long as possible. There's two parts of the equation here: the income side of it and the appreciation side. And the houses that I've owned for 20 or 30 years have appreciated a lot. So I know if I hold on to them for a long time, I'll make a lot of money. But I have to buy something that I will hold on to. And the key to that is a tenant who will stay in a property for a while. So if I ever buy a house and I get a tenant and they move out after a year, and I get a tenant and move out after a year, I just get rid of that house. I want a house that attracts somebody because it's in a good neighborhood and it's the right size, that'll stay 5 or 10 years. And I visited with a lady yesterday who's been in my house 22 years. And she wants to stay there the rest of her life. And she's my age, so she's got another 30 years to go. Those are
At
my
least.
kind of tenants, and my average tenant stays about 10 years, because we take good care of them, but we give them a good place to live at a fair rent.
That's fantastic advice. John, you have been a pillar in the real estate education community, and God bless you for it. I think the biggest fear everyone should have approaching any kind of investing is not understanding what they're getting into. Mm-hmm. And you've got some education coming up on April 24th on the internet. Tell us a little about it.
Well, my good friend Peter Fortunato and I get together about once a year and we do something. And Peter and I have known each other since the 70s. Our kids all grew up together. We've owned property together. We make deals together, but we're synced up in many ways about how we see investments, although we take totally different approaches. So it's really fun to have two people on the seminar who are going on. We're on the same track, but we're in different cars, but we get there, we get to the same place. But anyway, Pete's the smartest guy I know. He's very honest. He tells you exactly the way it is, and he's very easy to understand. So between Peter and I, you'll get a whole bunch of information on how to really do this. We've both been doing this full time since the 70s, since we got out of school. So we know a lot about the business, and we're happy to explain it to people because we like to keep you from making some of the mistakes that we made over the years.
Well, that's exactly why we have the Real Estate Coffee Break. I thank you so much for your time this morning, and I'm looking forward to being able to spend a little more time going in depth into all of these points that we're looking at right now. I'll have that information about the April 24th event. In fact, I'll bet it's in my inbox right now, and we'll post that right here. John Schaub, thank you for your time, and look forward to seeing you again real soon.
Thank you, John. Always a pleasure.